All right, here we are, last chapter in financial accounting. This is the statement of cash flows. Very important statement. It's going to help us learn how our operating activities, investing activities, and financing activities generate cash receipts and cash payments. And also, the statement of cash flows is used to predict future cash flows. It'll help management make decisions and predict their ability to pay its debt and the dividends, giving that share of earnings to the shareholders, keep them happy. So the statement of cash flows has three basic types within the statement, and it's three basic sections. They have the operating activities, investing activities, and financing activities. And we're going to do bite size. We're going to break out our statement of cash flow and do a video for each of those activities. So as I get into those sections, we'll talk about them a little bit with an intro. So first one we're going to do is the operating activities. So just a brief intro on operating activities. That's our first section of the statement of cash flows. And this section reports on activities that create revenue and expense in the entity's business. And it's also most often said to be the important category. So within the operating section of the statement of cash flows, that would include our current assets and our current liabilities. So those are the two categories are within the operating section. And so we can see here we have a problem where we want to prepare that statement of cash flows, and we're going to format using the indirect method. And so they purchased land for $21,100 by financing 100% with long-term notes payable during 2024. We'll get to that in another bite-sized video. And then during the year, there were no sales of land, no retirement of stock, no treasury stock transactions, and plant assets was disposed of for $0. And the cost and accumulated depreciation of that disposed asset was 13,410, which we'll need in a little bit. And then the plant asset acquisition was for cash. So some important info in the beginning that we'll have to refer back to. And then we have our balance sheet, and it's a comparison of 2023 and 2004. And we'll need all these components to help us. And since we're doing the operating activities first, we can see here we have our current assets that we'll need and to look at, and then also our current liability. So we'll start breaking that out in a minute. And then we have also an income statement. So the income statement, this is where I get to step one for preparing our statement of cash flows. And so we can see here, step one, I want you to take from that is the net income. So that I'll just write in here, step one. And that is going to be recorded in our statement of cash flows first box. So our net income, we'll go ahead and mark that in. So we're already getting started here. There we are for step one. And then we're going to go into step two now. So step two, we're going to start recording is our depreciation. So we're going to add back that depreciation expense because that was an estimate that we created and there was no cash involved. So our next line item right here that we have a blank box for, let's move this up a bit. There you go. So we're going to start recording our depreciation. We're going to add it back. So depreciation expense for the plant asset, we'll add back. All right, so let's go back up to that income statement and take a peek at it. And we can see there that we do have on our income statement some depreciation that we'll need back. So we're going to add that back. I'm going to make I noticed that my pen was just a little too thick there. So let's just use a better one. All right. And so step two, make ourselves some good notes, add back on statement of cash flows. All right, so that is our depreciation. And then step one was our net income that we needed. All right. So that's 14,400 that we're adding back. So we're going to just increase that net income figure. We're just starting to mess with that net income figure of 96,400. We're going to start adjusting this number based off of what happened with cash or didn't happen with cash. And so that's why we're adding back this expense. We're going to increase that net income figure by this amount because it didn't involve cash. So that's why we're adding it back in. So we can see there that our second step was just to add back depreciation. Now step 3, that's going to be analysis of our current assets and current liabilities from the balance sheet. So let's go take a peek at the balance sheet now. And we're going to have to start analyzing what happened between 2023 and 2024. So we can see here one of our items is accounts receivable. So we'll just go in order of what we have. Cash, we are analyzing what happened with statement of cash flows. So of course we skip that. That's us trying to get to this ending figure, and we'll know we got everything recorded correctly. So we can see down here, we'll start messing with that cash figure here. All right, so that'll be near the end, okay? So we're not going to worry about that account yet. So our next count in line on the balance sheet is, in fact, the accounts receivable. All right. And so we see 2024 was 26,500 and 2023 was 25,400. So we have an analysis that accounts receivable increased by 1,100. Right? So from 2023 to 2024, it went up. Okay. And so an analysis that I do, let's go ahead and just remind ourselves that this is operating for accounts receivable. Okay. So an analysis that I use as we're thinking about how it affected cash. So that's what we're thinking about. Did this difference increase or decrease our cash? We're going to think, okay, so from 2023, accounts receivable went up by 1,100 in 2024. So the business, Archer, collected 1,100 less cash in 2024. So they had less cash because the customers said, put it on my account, I'll pay you later. And that was for an additional 1,100 as our difference. Another way you could do, and this is another way to figure out. So we got 1,100 less cash. So we would say, okay, that's going to be a lowered amount of cash of 1,100 on my statement of cash flows. Or you could do this journal entry to help you figure out what happened. And so we see that accounts receivable increase. Well, accounts receivable increases with a debit, right? Because it's an asset. So we would say for a journal entry, it would be a debit 1,100. And so we're now analyzing, okay, well, cash then would be a credit for 1,100. And so that would be a decrease to cash. So you had two different ways. You could cheat with this journal entry, or you could say, well, what we have 1,000 less of cash, right? 1,100, I keep forgetting that 100, less of cash in our company. So that's one analysis way, or the other way, you could cheat with this journal entry, and you can see that we have a decrease for cash. So on our statement of cash flows, we're going to write accounts receivable with a decrease. That was our analysis for what happened to accounts receivable. So let's write that it was an increase in accounts receivable from the previous year. And so that increase would be reflected by a decrease in cash. Okay. let's keep going. We'll get a hang of this as we go through more of this analysis. I'll talk about both ways. So our next one on our balance sheet, next in line, is another operating of merchandise inventory. Current asset, and so we can see there merchandise inventory is an operating activity. And so while we're looking at merchandise inventory now, we can see that in 2023 it was 91,500, and it went down to 79,800. So we had less merchandise inventory. So we must have sold more merchandise inventory. So let's go ahead and write down inventory. And it decreased by the difference of 91,500 minus 79,800, and that is 11,700. All right, so it's the opposite. So it decreased. So another way of doing that is we could have said, okay, well, inventory went down, so we know we would have a credit for inventory. So if we did my little cheat of journal entry analysis, we could see that for the asset of inventory to go down, it would be a credit. Oh, okay, so I will say cash went up. All right, so let's go ahead and record that one here as well. Oh, perfect. All right, let's keep going. So what do we have left? I think we finished all our current assets. Those are the operating activities. So next we have is current liabilities. They are also part of the operating activities section. So the next one in line is accounts payable. So let's just label it so we remember that we completed and used them up. And accrued liabilities also. So let's go ahead and label that one too. All right, so these are two more that we have to do in the operating section for analysis. So we can see here that accounts payable it was 30,400, and it increased by 35,700. So our accounts payable went up. So it means that the business owes a little more. They're going to owe more cash. So they've had actually cash freed up. So their cash would be an increased reflection on the statement of cash flows. So let's go ahead and just write a label there again. Increase for accounts payable. Let's actually write be consistent. And that was by 5,300, right? 35,700 minus 30,400, yeah, 5,300. And so another way of doing the analysis, if you're like, oh, I don't understand that quite yet, I haven't wrapped my mind around that now there is more sitting there for being owed. So that means that more cash has not been paid out yet. So there's more freed up cash. So we would increase accounts, we would increase our cash figure by our adjustment on the statement of cash flows by 5,300. Or you could say, all right, let's do another journal entry. Well, accounts payable increases with a credit. And so here we go. We'll use cash. It is not technically correct this way, but that's the analysis. Okay, so cash would be an increase by 5,300. So we can see we use a journal entry just to help us with the analysis as we get the hang of wrapping around if cash is freed up or not between the changes in these operating current assets or current liabilities. All right, I believe we have one more, which is our accrued liabilities. So let's go back up and take a peek at what happened with accrued liabilities. All right, accrued liabilities was 30,300 and it went down, so opposite, to 28,700. So we can write here accrued liabilities decrease. So it's the opposite. So it looks like we paid out a little bit more cash to pay off those accrued liabilities, and they decreased by 1,600. All right, and so the analysis would be, well, if we decreased a liability account, liabilities increase with the credit. So if we decrease by doing a journal entry, it would be a debit, and so then cash would be the credit. And so we can see that we'll have decrease, or will reflect a decrease in cash on our statement of cash flow. So let's go ahead and go over there and do that. And that is it. That is all we have for the operating activity section. So I can see here that there's some extra lines, and you wouldn't normally put anything in here. You just leave it blank, and if your homework gives you more lines than what you need. We already analyzed everything, but I'm just going to write NA, leave blank, so you have it in your notes that these were just extra spaces, not needed. All right, and so we're going to add up all of these to get our net amount. So let's open up a calculator to get that. And we can see that the net is 28,700. So net increase of 28,700. Plus our 96,400. And we can see here that a net cash provided by, because it's positive, operating activities is 125,100. So we are done with the operating activities section of the statement of cash flows, and the next video will be the investing activities. So just as a recap of what we did, our first step was to go to the income statement, put the net income figure in, which is what we did right here. And then the next was to add back depreciation. So we went and looked at the income statement. We saw depreciation. And so we added that back. If there was gains or losses, depending on what those are, we don't have that in this question here, but if there were gains, we would we would decrease, and then if there were losses, we would add that back as well. But we didn't have that in this problem, so we didn't have to worry about that. But just in case you have a gain or a loss, again, a gain will be subtracted, and then a loss would be added back. But we didn't have that. That would be part of steps 2. And then step 3 was now to go and look at the balance sheet and analyze the current assets and current liabilities, which we did. And we went ahead and put them all here. So this section right here, from increase to decrease, this would have been step 3. All right, so those were our 3 steps for the operating section of the statement of cash flows.